Hello and welcome to another update video about silver. So together with gold, silver is also performing, but I believe these movements are getting close to exhaustion. We now have a higher high. That is what we've been waiting for after silver did hold this wave 4 support area. It did hold the support area. It actually really only touched the top of it. And this is the area that it needed to hold to have a, let's say, high probability rally in the fifth wave. If we look at the retracements that we had for this wave 4, you can see we reached the 23.6% Fibonacci retracement, which is sort of the minimum that you would expect for such a wave 4. And my view is that we're now moving higher in a fifth wave. That could finish at any time now, because all it really needs to do to fulfill the minimum requirements for wave 5 here is to get above the wave 3 high, and that was at 23.53, and we've done that. However, ideally we're looking at higher. For me, the minimum target for the wave 5, or let's say the minimum ideal target, because it doesn't need to get there, it would be ideal. That minimum ideal target is the 1-to-1 ratio, which is at $24.50. That is sort of the minimum that I would expect for silver to reach in a wave 5. But bear in mind, it already came a little bit higher than the third wave, so I could count it as complete. But ideally, we would like to see 24.50 at the very least. Even better would be, and that would give us just a clearer picture that we are in the correct wave pattern here. Ideally, we push a little bit higher to $26.05 or $26, the 1.618 Fibonacci extension level. So that's interesting. Now we are pushing higher. I gave you the two key targets here, and I'm looking at some point here now for a corrective pullback. If we look at gold as well, and I talked about gold yesterday, gold is also, I think, nearly exhausted. Yes, it can push a little bit higher, but I think it's getting nearly exhausted now. We can also see that by looking here just purely at the silver chart, at the relative strength index, the indicators, you can see that we've pushed higher here. We have made higher highs on the price chart. We are making lower highs on the RSI. That's the 4-hour chart, so quite relevant. And it's not a very strong bearish divergence, but it is one, and it just indicates that at some point here we seem to be getting exhausted. Okay, so we've got that. That's on the 4-hour chart. The MACD though is still pushing higher, so we still have upside momentum, but a bearish divergence on the RSI, even though it's not a very strong one, is always an indicator things might be changing. You see the same thing on the 8-hour chart, which is even a little bit more meaningful. On the daily chart, we also have a slight bearish divergence now. So you can see very interesting ways we're getting here very close to the overbought range on the daily even. So that indicates we are getting close to exhaustion. However, it's not over yet. The MACD is still pushing higher and still gaining in momentum, in bullish momentum. So there is no real sign yet that it's over. Especially if we go to the 1-hour chart. On the 1-hour chart, if we assume wave 4 was in here, we are now pushing higher in wave 5. I mean, it probably really is with the sign that it, or the signal that it really is over. We'll probably only get that if we break below the wave 4 low. That is at $22. Because if we really look at the possibility of wave 5 extending higher, I mean, this is of course a 5-wave structure. And it looks like 5 waves here are nearly complete. But what you never know is how far does this wave 5 actually extend out. It could of course be that we're going to extend here in a wave 1, 2, 3, 4, 5 over wave 5. So that this pushes a little bit higher. Let me just change here the structure. And nothing is going to tell us that other than this retracement. So the upcoming retracement, I think it will happen shortly. That will tell us, are we going to follow here an extended wave 5, or do we just come down straight away? Again, the key support level is the $22 level, And when, what is this first signal that the wave 2 has started here? The wave 2 of 5. Well, you can add a nice trend line here to your chart. And I think if that trend line breaks, it would be a very good indication that we're coming down in wave 2. And if from the current high, if we assume maybe we've topped already here, yeah, because we are pretty much getting exhausted on the 1 hour chart now as well. Maybe we topped, and if we topped, we should come down ideally in a wave 2. If this is going to continue higher still, we should ideally come into the region between $22.83 and $22.35, between the 78.6% and the 50% retracement. From here, we have a good chance to reverse. If we don't, we're probably going to drop below $22, and then we've probably completed that higher degree wave 5, and that would then form a wave 1, and we will come down. Don't forget, this could still be a bearish pattern as well. And what I just told you here for the smaller wave count, yeah, that we are expecting here possibly a small white wave 2 here, as per the extended wave count. So we expect a pullback very shortly anyway. Again, ideally, I think the approach needs to be, we've got the trend line here, and depends on your time frame what you're trading, but you have your trend line. If that trend line breaks, we're probably coming down in wave 2. And if the support level I indicated doesn't hold, we are probably already in the larger pullback. That's, I think, how it needs to be approached. So if this really is a bullish count, if this really is an impulse here, then we would also be looking at, as soon as we drop below $22, we would be looking at a larger wave 2 correction. So if we zoom out, the bigger picture would suggest that we're also moving up then in 5 waves. Wave 1, these 5 waves in pink complete a wave 1. We will then come down in a wave 2. Possibly we'll retest this descending channel or wedge. We will then move up in a 3, 4, 5, and so on. That is how we cascade higher. So again, it will be that next larger degree pullback as well that will give us a clue about, is silver already in a bull run? Have we finished the bear market low, or are we going to come down lower? It is that pullback that you have on the small scale up there, which will determine, do we push higher in an extended wave 5 or not? And you will have that as soon as you put a more substantial top in place here. The next move down will tell us as well, do we make a new low, or is it a 1-2 setup that will set us up for higher? So it's always that wave 2 pullback that is going to test a bullish count. Let's say we have topped now, which I don't think we have yet, but let's say we have. In that larger degree wave 2 pullback, we should not drop below $18.81. That's the 78.6% FIB level again. So ideally we get into the region between $20.59 and $18.81. That's sort of the region where you would expect a larger degree wave 2 to get into. If we drop below 1881, it's very likely that we will make a new low below the August low. Okay, and that's my update about silver. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.